The daily video you are about to watch will require a paid subscription to WickedStocks.com beginning Tuesday, March 1st. Become a WickedStocks.com premium member to continue receiving our daily SPY report, our daily QQQ report, our weekly DIA, IWM, and Bitcoin reports. Monthly subscriptions start at $25 a month. If you're not ready to become a premium member, I encourage you to become a basic member for free, which will alert you once these analysis videos become part of our paid subscription plan on March 1st. We will continue to offer free and valuable content on YouTube, though it will not include the series of videos mentioned earlier. We hope you become a WickedStocks.com premium member. We offer a 7-day free trial, and cancellation is allowed at any time. Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily QQQ report for Wednesday, February 23rd, 2022. Just as usual, want to ask you to click like each and every time you watch any content that Wicked Stocks uploads to the Wicked Stocks YouTube channel. It helps us out a great deal in being found for relevant content. And also subscribing to the Wicked Stocks YouTube channel provides you notification each and every time new content has been uploaded to the Wicked Stocks YouTube channel. We upload a lot, just about every day throughout the week. And so seeing it early before the opening bell is to your advantage so that you can use it for your trading. Let's jump to the charts. Big day. This is sort of a big picture here. You're familiar with this, I'm sure. If you've been watching the QQQ for the last month, you know that when we closed below that 379.35 channel bottom, the target became the 330.60 rising channel bottom. And we almost tested it on Tuesday. I consider the 1% zone to be a test, essentially. So 330.60 is the channel bottom today, and if we approach or test 333.91, which FYI is just below that 334.12 low from January, and we missed that by just a narrow margin on Tuesday. 334.35 was the low, so just over 20 ticks. And so it's kind of like a double bottom really right now, although we didn't actually test that January low. But bottom line here is this is the area. This is the zone that we've been anticipating. It begins really at 333.91 today with regard to the 1% approach of that 330.60 long-term channel bottom. This channel bottom, as I've been saying, can contain annual selling pressures. And from here, we can rally back into the 370s again within several weeks and back to that 408 area high within probably 3 to 5 months or less from here. And so we could rally by mid-year. At the latest, we could retest that high area from where we are right now. If we do close below 330.60, and once again, that's a 1% violation to the downside, I realize in this moment that I haven't included that in this slide, but it would be 330.60, minus 1%. So, that is 330.6 minus 3.306 equals 327.29. I'll make sure that we include that in the post editing. 327.29. In other words, we can slip through 330.60. But if we close at 327.29 or lower, a 1% violation of that channel bottom, then we enter another phase of significant selling. If I'm just looking at the QQQ chart, we enter another phase of significant selling, whereby over the next 3 to 5 months, we could fall all the way back to that 258.51 long-term speed line. This is where this goes from a mere significant downside correction to an actual bear market. And I think I was saying in the SPY, and I think you are familiar with this idea, this notion that bear markets in the stock market, at least over the last 30, 40 years, last in the order of months, not years. And so, we've got the November high. If we tested 258.51 by mid-year, that would be a 6 to 9 month bear market, essentially, as measured from the high itself in November. We are not there right now. I'm just sort of pointing to that if we do violate 330.6 by the 1% margin, there is a case to be made for longer-term bearish continuation. Now, while I say that, I'm also going to underscore the fact, and I know that I've thrown this at you before, that the SPY itself has yet to test its long-term support. It's appreciably further away from its long-term support at 403.37 than the triple Q is presently at 330.60. And so, there is the scenario that if we do close below 330.60 by that 1% margin, 327.29 or lower, yes, the triple Q has its own sell signal, but I'm going to be closely watching the SPY as it approaches that 403.37 to 405.99 region. You could consider buying the triple Q when the SPY is testing its long-term support at 403.37. I know that's not it might not be a popular way to trade, but I think in terms of intermarket analysis, I think it's a valid approach. So I'll let you do with that as you may. Just know, I think this is the concept I'm trying to convey, that if we close below 330.60, yes, triple Q has set off a significant long-term sell signal, and you could act on that by buying long-term out-of-the-money puts that don't expire for at least 6 months in the 260s, let's say. But I do think that on the way down, as the SPY tests its long-term support, that's going to test your patience, and it may well put out a longer-term low in the triple Q when the SPY is actually testing its long-term support at 403.37. I think I've said enough about that. Now, upside, holding above the 330.60 to 334.12 area, we can actually stabilize now and turn higher. As I said earlier, we can push back into the 370s here pretty quickly, and by that I mean over the next few weeks. Let's open this chart up and show you that there is a nearer term resistance. I know you're familiar with this descending channel top at 357.53, and so holding now above 334.15 and 330.60, that long-term channel bottom, will keep 357.53 in reach over the next week or two. On the way up today, I've got minor levels. That green horizontal line is roughly where we close, and you can see the 330.60, 334.15 area, and above which 343.89 is in reach today. It can contain daily highs, and holding below 343.89 will keep that 330.60 long-term support level in reach throughout the week. But if we do, let's go with pushing or opening above 343.89. 349.45 is in reach intraday, where we could top out initially, possibly for the day itself. But if we close above 343.89, we should, over the next 3 to 5 days, rally back to that near-term resistance at 357.53. 343.89 is nothing more than that pullback low from a week and a half ago. It's a similar session containment level that I have in the SPY as well. If you watch the daily SPY, I'm also using that as our pivot point. I like that area right now, not sort of long term, but at least for the day, because it lines up nicely with Tuesday's highs. And so, there's the old a signal. It's very simple bar chart analysis that if you put out a move low, and let's just assume for the sake of this comment that Tuesday's low, 334.35, is the move low. When you close above the high of that low, that's your upward pivot point. And so if we close above Tuesday's high, which is actually 344.04, just above that 343.89. I think you can pivot actually off of 343.89. If we close above 343.89, 3 to 5 day objective could be in as little as 1 to 2 days, 357.53, where we can top out for the week itself, and from there fall back into the low 330s. We could fill that wedge out for the next couple of weeks. If we close above 357.53, then I've got the low 370s as our next significant resistance. It's also a significant upside pivot point through March and into Q2. I don't have it shown here because I think it's a little irrelevant. I was showing it earlier, but I really need to see what this low is. We are in this low area right now. We could easily take it out today, perhaps. I need to see that low good. Like for instance, if we close today above 343.89, I'll then begin illustrating that low 370s resistance area, which is in part a channel structure based entirely on Tuesday's low. So if we take out Tuesday's low, I've got to recalibrate, reconstruct, and I just don't want to get too far ahead of myself. So anyway, I think that kind of covers it. I'm going to leave you with the support and resistance here for today. Pretty simple, pretty basic. We've got low to mid 330s, long-term support. We are approaching it. It's almost tested 334.15 on Tuesday. It can contain annual selling pressures, and from here we can rally back up to 357.53 over the next 2 weeks, and the low 370s you can see at the top of that support and resistance area over the next 2 to 3 weeks. That area, 370.24 to 373.78, not illustrated today, able to contain buying. Now, I haven't updated that text. I say through February. It should say through March. And below which that 330.60 area in reach over the next 3 to 5 weeks. Well, we essentially almost tested it on Tuesday. And really, it's the close above 373.78 right now. That is our upward pivot point. Good low through the second quarter. We should rally back to that 408 area high within a month or two. And over the next few months, we can push into the mid 420s. That's kind of the way I see it right now. I hope this all made sense. I'm going to leave you with the support and resistance. Please click like and subscribe to the Wicked Stocks YouTube channel. You won't regret it. I'll be back tomorrow for Thursday's daily Triple Q report.